Hi, everybody. This is Kate Horn, and I want to welcome you to another episode of Redmond and Beyond, where we learn about all things that make Redmond a great place to live, work, and play. And today we're kind of going to marry my career as a real estate agent with things that I think are important for some local Redmond residents to learn about, which is a little bit more about the mortgage industry. So today I have asked Larry Dodson with Guardian Mortgage, which is a division of Sunflower Bank, to talk to us a little bit more about mortgages. Hi, Larry. How are you?
I'm good, Kate. Thanks for having me on your little show, I guess, right? We'll
Thank
call it.
you. Thank you for joining me.
Honored
And
to be
so
here.
I'm really curious. I start out most of my interviews asking this question, which is, how did you get into the mortgage business?
Well, it started years ago, but I was actually recruited. I didn't ever think I would be a mortgage loan originator. Didn't even really know what that was. I knew people did loans. They needed loans for homes. Um, I got into it after the market crash in 08, 09, and it was actually a roommate of mine from college who got into the industry way before the market crash. But the big clean out, as I would say, um, created a lot more uh, rules and regulations on why the mortgage industry should be, and that's where we are today. Number one, it's a lot better of a industry for people that are getting into the industry and or for borrowers. They're well more protected. There's not all the crazy stuff that was going on. And when I got recruited, it was literally, Larry, we need people like you that have ethics and morals and know how to communicate with people and so forth and so forth and so forth. Because I had sold everything from soup to nuts, and it was all based on really communicating with people. And I would think that's my biggest claim to fame is that it'd be very rare for somebody to call me and me not pick a phone up or get some sort of message back, probably within about 30 seconds.
Yeah, that I have definitely found that to be true working with you. And you and I have worked together on a number of clients. And one of the reasons that I send people your way is that you are able to give people a lot of information. And I think when it comes to mortgages and borrowing money, it's important that individuals really understand what they're doing. And
Very
so,
true. I do this every day. Borrowers don't do something like this every day. So I think knowledge is power, and I think it's important to be able to share that with somebody that's going into getting a loan. They need to know how their loan goes together and what's important to them. Might not be the things that are important to me, but it's important to them, and so I try to bridge that.
sure, that is great. Thank you. So kind of to get the ball rolling on that, can you tell me a little bit about, different products that you have? So I work with people who are anywhere from first-time home buyers to seasoned real estate investors. And so just so that everybody has a little bit of an understanding, can you tell me a little bit more about some of the different products that Guardian offers?
Well, you really hit it on the head with what you said on what we deal with and who I deal with. Everything from a first time home buyer to investors to people buying second homes, investment properties, higher end first time homes, higher end primary residences. Um, Everything from, well, everywhere really, almost in the whole country. I can help anybody there. Obviously, you and I primarily deal in the state of Washington and kind of in the King County area, where loan amounts are typically higher. It's called a high cost county, I think is what that is. Get basically that, right? Pierce and King County are high cost counties. So anything from all the way up to jumbo loans we deal with. Our clientele. A lot of times, the prices of homes here and the desirability of living in our area. It's beautiful here, and so that's why it is the way it is.
So what is a jumbo loan currently for people who don't know? What does that mean to somebody?
So typically, people look at a loan, and what most people look at are they're looking at what's called a conforming loan or conforming loan limits. Conforming loan limits change every single year. We've watched them increase year over year over year. Going into 2024, from the time that we're doing this, which is not very long from now, the conforming loan limit in King County will be $977,500. Now, when you go over that, we get into what's called a jumbo product. So when you're looking at loan amounts, not home prices, but loan amounts that are 977, 501 and more, we're looking at a jumbo loan product. So it's
Gotcha.
underwritten differently, different guidelines and so forth. And we have that product to help people.
So that loan amount combined with what somebody would put as their down payment, that is what makes up the cost of the home, the price of the home, right?
That's correct. So we're talking about everybody has heard the phrase loan to value. Value would be what the home price would be, and the loan would be what the loan is for that amount. So, and this is not always true. People think that they need to have 20% down in order to buy a home. That's kind of the general rule of thumb. Probably people were told that as they were growing up, and that's not true. We can go some cases 0% down. So that would be called a 100% loan to value. If they were putting 20% down, it would be an 80% loan to value, if that makes sense. Looking at $1 million property, $800,000 loan, talking about a 80% loan to value.
And which would mean a $200,000 down payment,
Yeah,
which
that's
wouldn't
correct.
always be easy for everybody to do. So knowing that there are different ways to do that and to allow people to buy homes with less money down is definitely appealing to some people who either don't have that money or don't want to put all that money into a real estate deal, right?
That's correct, Kate. And I think a lot of people think that there's a one size fits all. And there are lenders that actually look at it that way. I don't. Every borrower needs to be handled with kid gloves, and their scenario is far different than the next person's scenario. So really, another one of my claims of fame is listening. Listening to what the needs are of the client and what their specific scenario is, and then we fit them into what type of a product would be the best for them.
Gotcha. So just following up on that kind of, amount of down payment, tell me how PMI insurance kind of fits in with that.
So mortgage insurance is actually a product that protects the lender. A lot of people think mortgage insurance is, because it sounds like this, that if I don't make my payment, that my insurance will take over and make that payment. That's not what it is. What it is, it's to protect the lender that it's going to cover that the balance of the loan, basically, is what I'm looking at. It's an insurance product for that. So I call it skin in the game. If you have the more skin in the game you have, the less that you have to deal with mortgage insurance. As matter of fact, if you have 20% down in equity, or call it 20% down payment, you're already 20% skin in the game on that property. That does not require mortgage insurance at that point.
So
The odds of somebody walking away from putting 20% down or have 20% equity in a property are very, very low. They wouldn't need insurance for that. Somebody going into a 100% loan to value or 0% down, guess what, folks? The odds of you stepping away from that, you don't have any skin in the game, you're going to need mortgage insurance. That's how that is.
Got it. To protect the lender, to make sure that they get their money back if that happens. But
that's correct.
And I think a lot of people feel like if they want to purchase a home and they don't have 20% down, being able to do it with 5% down or 10% down, that paying for PMI insurance is a pretty small price to pay to be able to make sure that they can get that loan and get into that house.
Correct. Because really the goal is the home, right? You're trying to put a roof over you or your family's head. And, there are a lot of people that they think that they can't get into a home, that they're going to rent their whole life, which real estate, as we all know, I mean, I can tell you this, but you can look it up and do all the research that you want, and you'll find this to be true, is one of the biggest ways to create wealth for yourself. Because once you get in that home, the equity that continues to grow, you can just carry that to the next home, the equity. It's just, I mean, it really is, not to be funny, but money in the bank for you.
Yeah. No, I agree. That is definitely something that I talk to my clients about as well, the benefits of buying a home. So to make sure that people are in a really good position when they're going into the kind of home looking process and thinking about putting an offer on a home, tell me the difference between a pre-qualification and a pre-approval, because I don't think everybody understands what those differences are. And in a competitive environment like we are in King County and especially the Redmond area, it's really important that people know those differences, I think. So maybe you could give us some clarity.
Yeah, happy to do that. And there is a difference in a pre-qualification and pre-approval. And even a step back, Kate, and you could probably attest to this. You as a real estate agent are way sexier than the mortgage guy because nobody really wants to talk about a mortgage, right? They want to go see a house. And I think on the end of a real estate agent, again, you can tell me yes or no. Not my interview with you, but just in a general state, that a lot of real estate agents want to find out what somebody is approved for, not qualified for, because nobody wants to show somebody a house that maybe they don't approve for and really crush their spirit. And the fact that, well, you can't have that, but you can have this. It'd be better for borrowers and people that want to buy their house to set them up for success is to get qualified or get pre-approved really prior to looking for the home.
So
And so
can
the
you tell people what that is? That's what I need. I need you to tell me what that is.
Right. So then going into that, what that means is applying for the loan. What I do as a lender and what lenders do in general is they look at what your income is. They calculate what your true gross income is based upon pulling a credit report to find out what your current debts are. Um, and that gives you a ratio uh, based on what you would qualify per guideline. And then we get real numbers out there for people or for that person's scenario so that they know what they can shop for. Now, the difference between the pre-qualification and the pre-approval is a pre-qualification is literally somebody typing in numbers on a loan application and using those and not really vetting them, just trusting the fact that those are the numbers. I
So
go a
like
step.
So like I could say, this is my salary, this is roughly, what I owe, but oh, if I've forgotten that I have a car payment every month or I have a student loan payment and I forget to write that in this form, my pre-qualification might be different because nobody has actually checked those numbers to make sure I didn't forget anything.
That's correct. So pre-approval and what we do is I actually get the requirement is 30 days of pay stubs, 2 years of W-2s, and or if you're a self-employed borrower, we need to get some additional documentation. And I literally get them to a real underwriter, a real person that underwrites the file before you even shop for a home. So now it's based on vetting assets, vetting income, and now it's just based on the property. So that's a real pre-approval. Now the benefit with somebody doing that with me is we get a pre-approval letter out so that when you go to make an offer on a property, it's a true pre-approval that Kate, a listing agent a lot of times wants to find out when you're looking in multiple offer situations, has this person been pre-approved? And they start making calls. I do one better. I call the listing agent before they even get a chance to call me and say, you're going to get an offer from, let's say it's the Johnson family for this property at 123 Main Street. And I just want to let you know that we've already gotten them through underwriting and we can close much faster on that loan because of that. You would not believe my batting average of calling these people.
That's great. Thank you. That's really, really helpful. And I
I
think
always want to
people,
put the buyer in the best position to win what they want to win.
yes. And in a market like ours, when things are moving very quickly, you want the time to be able to be spent with the buyer being able to really think about, is this the home for me, rather than are we going to be able to get the home?
Right.
We want them to be able to get the home that they want. So thank you. That is good information.
And that's why
All
I love
right.
teaming with you because you understand that process.
Yeah, no, and hopefully a lot of real estate agents understand that and can help guide their clients in that way. So absolutely. Okay, so what kinds of things do you think are really important when somebody is just starting to look for a home? When should they start the process of coming to talk to a mortgage broker? Is it, when in the process should they start thinking about it?
Um, as soon as they want to buy a house. And the big thing that a lot of buyers fear, I guess, for lack of a better term, is, are you going to pull my credit? Well, we have to pull your credit. And you want a lender to pull your credit so that you get a true idea of what these numbers are. Now, credit reports and typically loan applications are good for as long as the credit report is good for. Credit reports are good for 120 days. Okay, so as long as you close that loan within 120 days, there's really no reason to repull a credit report unless they get a notification that somebody's gone and bought a car, somebody else has pulled their credit, those sorts of things. So when an approval's done, it's really, really advisable not to go and purchase a car, not to go take out any other credit, because that will affect the approval. If somebody's debt to income ratio is really right at a super tight number and they go and buy a new car, it could put them over where it now disqualifies them and it could blow things up for them. So I always advise people, once they do that, let's get your house first before you get your car or whatever it may be.
Gotcha. That makes a lot of sense. And to have that relationship with somebody like you will allow them to be able to ask questions, and you really have a good idea of what people are thinking
It's all
about doing.
education. Yeah, it's all
Yeah,
education and communication, Kate, right? Knowledge is
yeah.
power, as I said earlier. So
Awesome. Well, tell me, Larry, what do you do when you're not helping people with mortgages? Because I know you are very busy.
yeah, I like to stay busy, that's for sure. I do have a love for, I have a old classic Mustang. It's a 1970 Mach 1. I have a love for, they say you should never love a car because it can't love you back, but I swear this one loves me. It lets me spin the tires, it lets me polish it. I like to keep it clean, and I love turning heads with it. Um, my whole family's always been big car lovers. I'm not sure why. In the United States of America, people love their vehicles, that's for sure.
Yes, we do. And I have a husband that is the same way, and he loves his vehicle. And I don't know, are you familiar with the Redmond Exotic Car Show that they do in the summers that they do at Redmond Town Center, where people bring their exotic cars and everybody goes and oohs and ahs?
No, I'm not familiar with that. I do know there are a number of shows around, during the summer, but I'm not familiar with the Redmond one. I'd love
Well, you'll
to
have to
check
check
that
that one
out.
out
Yeah,
because that's a really fun one.
yeah. There's no other be able to look at some beautiful cars, and typically they have food vendors, and I like to do that as well. So
Absolutely, absolutely. Well, Larry, thank you so much for giving us just a few minutes and explaining some, I think, really important information for people who are interested in learning more about the home buying process and especially the lending process because it's so important. And all of your information is up online, and I know you are always available to talk to clients and prospects or anybody who just has some questions. So
100%. Kate, also just, for folks that are out there, if they want to get a second opinion, I'm happy to look at that. If they have somebody that they've already gotten a quote from, I'm happy to look at it. And if there's an opportunity of saving them some money at the cost of doing a loan, I'm happy to do that too.
that's awesome. Thank you so much, Larry. That is really great to know and really appreciate your time. And thank you, everybody, for tuning in to another episode of Redmond and Beyond. And have a great day, and we'll see you again soon.
Thank you. Bye-bye, everybody. Call me anytime.
Bye.